Good Friday evening, peoples. Well, we got through the week in the markets. Let's see what next week brings. I got a lot of videos to get out. This one is YouTube. I got a couple for Patreon only. So this one is Roundhill versus YieldMax. So I continue to update this weekly. As you guys all know, the Category 2, all the single stock yields come out on Wednesday for YieldMax, and they all come out for Roundhill on Friday. So by doing it on Saturday, Friday night, I have the week stats. So everything is comparable. They've both been paid. They both use closing prices on Friday. Um, in calculating total return. So let's jump in. Not a lot has changed. YieldMax picked up one, and we'll see that in the summary. One win that they hadn't won before. So right now, Roundhill in equal pairs where they're the same underlying, same category. By the way, I include YieldMax versus WPay. Now they have a different base, but same time frame. That's the only one that one could argue it's not exactly the same. But the Mag 7 versus Maggie or YMAG versus Maggie, those are the same underlying. Um, and then so WPay that one, and then I'll talk about the other category. There are like four that Roundhill has that YieldMax doesn't. YieldMax has many more that Roundhill doesn't. So out of the 20 comparable funds, previously Roundhill had won 16, which is 80%. This week they're 75%, 15 out of 20. It's still a huge win for Roundhill. In flat, in up markets, Roundhill almost always wins because they have leverage. It's only when you start going down more than you're going up. And I always say, who wants to be in that, right? If I'm in any fund, if I'm in a YieldMax and I'm a YieldMax fanboy and I only want to buy YieldMax, then when it's going down, you better hedge. You better buy a 2x bear fund on that underlying if you want to hang on for income, right? And then as soon as it does, why own a bear? Why own a fund? All funds have periods where they go down. So all of that and more I cover in my Patreon now, guys. I'm not giving it away as much free on YouTube. I'm sharing a bunch of data like this. I'll continue to do that. But behind my paywall, I have a lot of additional content. I'll talk a little bit more at the end. All right, let's jump in. NVIDIA. Roundhill wins. Look at distributions, pretty much even, 50 to 49. And that's not uncommon. Sometimes YieldMax wins on the distribution, sometimes Roundhill wins. It's usually over here, okay? And we had some downturn this week, but and what you notice is look how many of the funds on both sides. So everybody's hurting right now unless you're in miners and metals. Okay. They're not particularly going up right now. We've been in a retrace since October 16th, but I expect that to finish up shortly. Another 2, 3, maybe 4 weeks. Um, and then we're off to the races in the metals. I mean, it's not even close this year. So the commodity super cycle is real. That's what I talk about in Patreon. So there's NVIDIA. Let me stay to the point here. 30% to 10%, 31% to 10%. When we go to Tesla, right? And test LW, test LY, look at this gain or loss. They're right here. So let me do the math. That's 1%. Yeah, so they distributed 12% more. And that's where you get the 13 versus 1. And they both have the same gain or loss. So YieldMax wins on that one. On Apple, Close, point and a half, 0.7. Um, APW is a better performer. And then when we get to a real loser, right? Look at this. Coinbase, 72% loss versus 62. See, there's the 10 percenter. Then we outpaid. So altogether, Roundhill really wins this one. And your argument to say, oh, they just go down more. Yeah, they often do with that leverage. Not guaranteed, but mostly. But look at this is because it's been up and then it's been down a lot. On the up, they really outperform. On the downside, they only partially outperform or underperform on the down. So, you know, look at this. I mean, it is, they've managed to hang on and only have a 1.61 in a pretty ugly environment. Again, this is since 2019. All right, so Palantir, you guys know I love the software underlying, but the market is telling us everything's overvalued and there's a lot of fear. The big thing now, guys, is the Japanese yen is starting to really take off. That could be a black swan event and cause a 20, 30% pullback in the overall markets. There's some fear there, and it's legitimate. I talked about the circular revenue around the AI FOMO and NVIDIA's chips, incestuous. You rub my back, I'll rub your back, right? And so there's a little more than, and then the lengthy depreciation to keep their earnings abreast when they should be forced to write off these chips in a much more aggressive way very quickly. They lose 90% of their value in 2 years, these high-end, expensive chips. Excellent chip and excellent technology that NVIDIA has, but it's still questionable. It's keeping the earnings loftier than they would be. So that's what you have in these or in the AI FOMO environment. It affects NVIDIA more than anybody. But the baby is getting thrown out with the bathwater. All AI stocks are suffering. But look at this. Is regardless, they're both positive. You don't see that a lot. And look, Pulte can't help itself. It isn't even distributing more annually, and it just can't hold on. It just simply can't hold on. So that's brutal, just brutal. The down move versus what PLTW has been able to do. All right, so some of these are very close. Look at this, 1085 to 1084. I want, it's darn close. And they're just outpaying like crazy. AMSI is just, 66 to 42 because you got the same thing. You're not going down as much. So real interesting on some of them. This is so close. This one, Berkshire Hathaway, a little bit. You're still getting green. There's not that many. Well, there is because this is a 9-month segment. Wait till we get to the ones that are only 2 or 3 months or a month. The market's been ugly, and yet as you guys know, I love GDXW and I don't care for GDXY. If I have the choice, if I had no choice, I'd probably buy GDXY in YieldMax and saying, hey, at least that's got a 4 or 5 year tremendous bull market for the underlying GDX and GLD, which is gold, but Roundhill doesn't have one on that. All right, so close. Not close. Berkshire Hathaway, 7% to 3%. All right. Now another negative, right? 16 versus 17. So you win by not going down as much. That's the idea, right? And that's typified here. Look at Netflix and Net LW underlying Netflix, right? Um, didn't go down that much. You only lost 3% in the YieldMax. You lost 17 here. That means that's really going down, and there's where the leverage is. They're even out yielding. and it's not helping because you got a 22-point issue here. 2 wins. These have been pretty consistent. This one's getting closer now, 11 to 10. But YieldMax is winning these two categories, right? And remember time frame, guys. The reason I have them color coded, these were launched in groups of 5. So these are, 9 months in the market. These are 5 months in the market, right? 276 calendar days to 150. Remember, my time frame's already Saturday here. You're still Friday, so if anybody does the math, that's why it would appear a day ahead. Because my calendar, when Google picks up the date, it picks up the date on the computer here. All right, so 5 here. Roundhill wins the first 4. And let's talk. So I talked about AMZ, I talked about that. Now when we go to Hui, big lopsided win, not even close. Out distributes it, right? Fifth raw, 53 to 41. Annualized, taking the 157 and make it a year, 125 to 97. And then look over here on the gain loss. Ooh, because it ran a lot, it's turned down pretty aggressively now, but you're winning over here. So it's never good to say, well, if it stays negative for another 8 months, YieldMax might win. Yeah. Who the hell wants to be in it if it stays negative another 6 or 8 months? I mean, my gosh, the whole premise is to win, not get yield, right? You don't want yield when your total return sucks because you lost money. It just mathematics 101, but people just don't, they only look at that payment. I wish in general people would just say what is gonna go up. That's what I talk about. This commodity super cycle is the future. It's where things are going. And you guys are still, now crypto may turn around, may, but the commodity super cycle is happening. We've got some things in oil and gas that I'll be talking about this weekend in Patreon with my videos that, you're a little early. Oil hasn't really turned, but it will, and it'll go up big. I mean, energy is so critical. Why do you think we've got a chip issue right now? Why did NVIDIA report perfect earnings and then sell off on Friday? Because the market knows that the chip stuff is dangerous right now. 3 reasons. First off, the chips accelerated so high on the semiconductor. Okay, so high, and every time that's happened in the last 5 years, that happened 2 previous times, and it just happened 102% above the 200-week moving average. You pull back 40%. We've only pulled back about 12%. So that doesn't set well with the big chip players. Secondly, that incestuous nature of the chips. Thirdly, the accelerated depreciation making the chip companies look like their earnings are massively better than they really should be because the shelf life is only 2 years, or at least 90% of the loss of value after 2 years. And they get about a 2.5 year life before they really need to replace them. So the final caveat, guys, listening to the CEO of NVIDIA, there's unbelievable demand. Well, hold on for a minute. What do they use the chips in? They put them in large AI data centers. Okay. And what is there not enough power for? The power grid right now cannot support the level of data center build out that would be needed to build them all. So they're getting canceled right and left. You'll see more in the news about that. And they're getting canceled for a simple reason. The power grid and the power companies that supply the power cannot support that. We have 50-year-old grid structure in some geographic areas in the US, and some of the newer is 30-year-old. You got transmission lines, so the idea in these new AI data centers is where you have a nuclear facility really close by and you go build in that area a bunch of super mega AI data centers. Well, they did some of that, and that sucked up the power. So they're out of power. Go look at your Dominion power in Virginia, where there's a big mass amount of mega centers, and then look in Texas. We went through all this with Elon Musk and his mega centers and chips and all that for the robo taxi and probably SpaceX and certainly Tesla and who knows what all. Elon's out there. He's always looking at stuff. So he loves AI and loves powerful chips and all that. But the everyday, this fuel for AI, there's just not enough power. So what's that going to lead to? Why do you think I talk about uranium? Yeah, the stocks have been beaten down, but don't look at the fundamentals, okay? The timing's not particular, but we're close. We're at the 50% retrace level. They're volatile. Uranium is massively volatile. But fundamentally, that's where we're going. Much, much higher prices in the spot of yellow cake, the name for the material they dig out of the ground that power plants, nuclear power plants enrich that to create the nuclear fuel. And guys, that can double and triple that spot price on the raw. It's 1.5% of the cost of operating a nuclear facility. So it's not like, oh my God, the nuclear, they'd have to charge 10 times the rates. No, not at all. Problem with nuclear is it takes a long time to build. The big size reactors take 10 years to build. SMR, small modular reactor, NuScale's behind that, some other companies. That's a 4-year build, 5-year build, but it's only about a third of the power. So you've got to deploy many of those to get the big volumes of power. Bottom line, just based on sort of the AI trajectory and the emerging markets, these third world countries that are growing, their people want what Canadians and Americans and French and Germans and British and all of these first world countries. China is becoming really a first world power, obviously. And India is emerging, and they got these massive. They all want the same, tablets and smartphones and all the other things the rest of the world has that are power hungry, right? We're charging, we're running. Everybody wants that. So some of that oil is efficient for, but some of the really high-end power for the AI data centers, it's almost nuclear. It's called base load, and that base load's important, guys. You can't, these little one percenters, solar and wind. Good luck with trying to, be in the hospital and extreme care or, be on dialysis or be on something else and the sun doesn't shine for a week. Or you got a wind turbine providing power and there's a freeze on and the blades all freeze up. It won't turn. Look, we're learning, guys. It's a technology that can get better over time. We're trying to do wind turbines out on the sea now to say, okay, well, we don't want to take all our land space with all these blades spinning around where maybe it affects the mood of the cows and they don't produce as good a milk or, whatever, guys. I don't know all the nuances, but I understand energy, and energy is part of the commodity super cycle. It's going to go a lot higher. These oil companies for years have had disincentivized, right? With all the environmental, you can swing too far one way and swing too far the other. Okay. I understand reduce carbon, right? But you see a lot of billionaires saying that flying around in their private jets. Oh, we need to cut carbon. Go into another, green conference, and they all fly in their private jets. So, there's this disconnect. That's what other people should do, not what I should do. Always the case, right? It's like politicians, warlords. I don't care if you're Republican, Democrat, Libertarian. When you're a neocon and you want war instead of peace, send your own kids, but they never do. They don't want their kids to go, right? That's for the other people, the deplorables, right? Let them go fight the war. So, bottom line, guys, is super commodity cycles here. This is what happened in the decade of the 70s. This is what happened in the decade of the 2000s, and here we are again. This will be a sight to behold. It's a blueprint. If you're ignoring it, you're ignorant, right? The smart money is lining up. They're getting in. If you keep on doing what you've been doing, you're going to keep on not getting the same results, right? You were getting great results. Buy the dip, FOMO, Mag 7, NASDAQ, S&P. This is what we're going to get. No, you're not. It's changing. Just go look at 2025 year to date. Go look at the S&P, go look at the NASDAQ, go look at the Dow. Then go look at the commodity super cycle. Look at gold and silver and gold and silver miners. And in another year, look at energy. Massive outperformers. You'll see foods, grains, you'll see a lot of things in that commodity super cycle. It's all real things. And it's not so much that they go up or that gold goes up so much and the miners make so much more money. It's because the paper currency is going down and the central banks all know that. They're the bankers of the world. They're smart, they're conservative. Right now, they don't trust Bitcoin either. They don't like the volatility of Bitcoin. Now, that could change in the future. I hope it does. All right, guys, back to the Meta, Facebook. Close. Another close win here. Here, they out distributed by 10% and 10%. So it ended up being, less than 1%. That could change. Netflix, YieldMax wins pretty substantially. Now, my guess here is this poor thing has just gone down, 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 and therefore the leverage is hurting Netflix, is hurting the W. But I would say to you, are you really winning at YieldMax? You've lost money at the end of the day. You've lost more over here. But I don't pick losers, guys. I ignore losers. I want to be in what not only good for a month, I want something that has higher highs and higher lows for a couple of years, 3 years, 4 years, 5 years. Will there be pullbacks? Absolutely in the miners. They'll run up 100% and pull back 0.382 or something, maybe a .5 in a real, where they've run maybe 300%. And then you can stay in it for the income side and just buy a leverage fund. Or sometimes I use options, but go out and buy a 2x bear on GDX, buy a J Dust. So there's many things. I talk a lot about that now in my Patreon. And the same thing for energy. If energy sells off, I mean, uranium is super volatile, but it runs like silver does, just aggressive at times. We're finishing up a pullback right now, and then the next launch up in 12, over 12 to 18 months should be very massive on uranium. I play the ETFs. I don't buy too many single stock names. If I had to just name one for you, go out and buy CCJ. That's the big North American producer. Safe jurisdiction. They know what they're doing. Great management team. It's in all the ETFs. And there are some other good companies out there, but that's the one that really stands out. The safer big guy. All right, so look at the blue ones. big winner here. Warren Buffett is talking about having bought into Google. And of the Mag 7 up in that, they clearly underperformed during the course of the year, and yet they have some great tech. They're not only fueled by AI, they're an AI player, but that's not exclusively them. So if Warren thinks it's undervalued, he's not a dumb man. Sometimes he's early, right? If the market, we get a black swan and the Japanese yen, which is scaring people. It's been, guys, the Japanese yen story is they have 240% GDP or debt to GDP, not stable. But they've been able to handle it because they basically they had negative interest rates at the COVID turn. You had to pay them to hold cash. Literally, guys, it wasn't just a day, there were months on months. And then they slowly started having, like, they got up around 1/4% on interest. So it's a global issue. People from around the world were borrowing in the Japanese yen and then using that money to invest in all kinds of things, in crypto, the US stock market, all the things that they saw as moving up. And now the Japanese yen, the 10-year, has gone from 1/4% to 1.8. I mean, it's flown up in the last 30 days. If that doesn't stop, that's going to have ramifications around the world. It is having ramifications. Some people think it's some of the issues behind a potential sell-off that we're seeing in the US and in other global markets. Let's see. I hope it stabilizes. If it doesn't, it's going to get worse. Okay. And the one thing that I know will be stable is the metals and the miners. Now, they can get sold off with the market. They're on their own particular pullback because you go look year to date, the miners are up 80%, 75% year to date. The triple Qs, 13%. Spider, 10%. And numbers could vary a percent or so, guys. I put these stats out to my Patreon guys weekly. So I'm keeping them abreast of what all this is doing. So on YouTube, I'm ranting about this when I'm doing these videos because I'm not going to give away all of my expertise to YouTube. You guys didn't even watch the miners when I did them in May and June. Nobody. And even today, the commodity super cycle is not being bought. By January, some of the 79 trillion that the boomer generation holds, their financial advisors will be asking them to rebalance their portfolios, the real wealthy ones. And they will start including probably the end of December. These guys love to get them in something. And then they go, look, we got you in the miners. Look at, they're up 85% this year. We got you in these other commodity plays. They're up 20 or 30%. Right? So we're beating the indexes. They love to do that. And then they'll keep them in that going forward. And that little bit of extra money, that little money that's coming out of the Mag 7 and coming out of the AI FOMO companies is enough to fuel. And then guess what? All you listening to this video, the average Joe, me included, and all this, the retail people who I happen to know this because I studied it and it saved my existence, in the last commodity super cycle. Because I hated that .com boom. I mean, that bust. It killed me. It killed my stock value that I worked so hard on getting those incentive options. It just blew it up. Okay. I don't want that to happen to you guys. Get your account. If you stay in something too long, okay, and it's toppy and it's future, I'm not talking, I don't believe in the 29 crash. I don't believe we're going to be 90% down in two or 3 years in the S&P and all that. Remember, the S&P goes and picks companies. So what do I think this commodity super cycle effect is going to have? Maybe in the top 10, you'll have 5 gold and silver miners. We already had one during the year, Newmont, the world's largest miner. It was number 1 for a while, number 3, number 5. Okay. And some of the recent companies, some of the techs that got ahead of it just blew up, really went down. So you're going to see 5 in there. And guess what? The public's not stupid then. Then the public's going to wake up and you guys are going to come in the 6th inning of the ball game, but you could get in the late 3rd inning right now. But no, that isn't the way it works. The average person buys in the 6th inning and the 7th inning and then says to the moon, and we're selling to all you guys, all of us early people. I got in the 1st inning. Okay. A lot of my Patreon, some of them got in the 2nd inning. Some of them got in the 3rd. Those that didn't get in until October are down. But they know. I told them, you may go down here. Okay. But not much. And it won't last long. All right, guys, enough on the rant. The blue ones, they put 4 out, right? They done 555, right? And they did February, another, so 9 months, 5 months. These are your 5 months. And then they came in with these 4, and they were all in July. So we're talking 4, not quite 4 months, but call it 4 months. Next week will be 4 months. And look at this. They're all starting to turn red, right? The Mag 7 because of all the stuff. So there's a wind again. This one's ugly. Is this really matter? Roundhill 1. Oh my God. Do you want to be in this? MicroStrategy. It's a train wreck. Now, it may bounce. It's at a level here where it may get a 5 or 10% bounce. I'm not ready to go in. I don't want to swing trade that. You could. When it gets, nothing goes straight down, even in a bear market. When you go down a lot, you're taking that elevator down, you're going to bounce. But don't get fooled that you're out of it, right? We got a long way to go before MicroStrategy and Bitcoin have fixed themselves. AMD, another ugly. Look at this, right? I told you about the chips. I told you guys. I didn't get fooled at all with NVIDIA. I said they may report great earnings. The market went up in the after hours. Let's see what happens on Friday. We did not get a confirmation, guys, to say the least. And now the chip players are selling off. 81% because of the previous run. And it's not these are negative for the next 2 years. This 40% pullback that I talk about SMH is probably a 2 to 4 month. That's what it was in the previous pullbacks when it went up 102% above its 200-week moving average. It just gets stretched. It's a rubber band, guys. When something just gets stretched and stretched, or a balloon, right? It's gonna burst. That's why when you get stretched, you want a pullback. You don't really love a 40%. But you hate it if you missed it. So the worst thing you can do is chase. Go, oh my God, I wasn't in AMDW or I wasn't in AMD, right? I only got in for the last little 5%. And then it hit the top. And then over the next 3 or 4 months, you're down 40%. And you're like, oh my God. Well, guys, that's what happens. That's the average person does that. Listen to me. I've done it. I've been there, not in the yields because I'm way smarter in the market with 45 years now. But everybody has a losing trade if you're trading. All right, guys, Avgo. Also, chip, right? Not exclusively chip. All right, I'm going to go fast because I did this when I reported on Roundhill. I don't want to just keep doing this. This guy, now the problem is I don't own any GUI or GUA. and I don't own the underlying. Even though Buffett's buying it, I want to see what might happen in a black swan. Are we going to get through this situation? The Nasdaq stabilizes in a while. I might consider, owning some of this. And I might be, missing out, but not really. I'm playing the commodity super cycle. That's much more of a guarantee. Costs go down, right? Look at this. No comparable here. Okay, here's a couple comparables. And I was surprised. YieldMax won. I am bullish longer term on the Chinese stocks because their PEs are half of what the US FOMO counterpart, right? So Alibaba, the underlying, is the Amazon without the AWS, without the cloud services, basically. But look at that audience they have. 3 times the market that Amazon has in terms of their reach. But everything's being beat up right now. So it's a question of, the less ugly sister or brother. So Uber, 83%. You don't want to own something like that. Not right now, not in this market. ARM, same thing. Good technology, fantastic chip, but it's a chip. All right, now, geez, I have to keep. Now, as I said to you guys, GDX is retracing because the metals ran up so high, silver and gold, October 16th. We got an A down, a B wave up, and now we're in a C wave down. Let's see where it goes. But you know what? GDXW, I'll take the 26% total return. They're not out distributing GDXY, but look at this. They're not losing. They're 2 times better, or double, right? 19 times 2 is 39, 19 and a half, right? So it's winning that battle. And it's damn close over here. Percentage, oh yeah, it's more expensive. So what? So this is one of my favorites because it's a commodity super cycle item that is running. The miners have leverage to the metal price. What is this? This is metals only. YieldMax doesn't want this. Is way too boring. It might be a real stable NAV. They don't want that. They want a high yielder. They want you to lose your ass in the NAV, right? They're going conservative now. They're selling you on, targeted and, portfolio ones. And, the only reason they're saying that is because those are more boring and more stable because they're tired of getting, Jay quit doing it. That's why they hired the spokesperson. He didn't want to take the heat. He knows it's ugly in the downturn. His lies and embellishments are catching up with him. All right, guys. So, what are the other categories? So, again, if I'm buying anything, I'm buying these. WPay versus YMAX. Oh, yeah, YMAX is a 40% yielder, right? How many YouTubers and fanboys were telling you that? Oh, you can give 40% a year. Why not just buy that if you don't like the Misties and Conies and Nvidias and, YBits, which sucked, and all that stuff? Just get YMAX. Well, now, granted, this is only from 9.4. I had to use 9.4 because that's when it came out, right? So you're only 2.5 months worth. Well, but they both, right? So look at the YieldMax junk and then look at, they both have a bunch of tech. And if anything, this is more tech than YieldMax because YieldMax at least has, pharmaceutical. Oh, yeah, they got a great one, right? Murney. Oh my God. They don't have much diversification in YieldMax. They like to think of it. This tells you right here. Maggie. Okay, they win on Maggie. because we get to go back longer, right? Sorry, they went on YMAG, but you know what I mean, Mag 7. When I said Maggie, I was thinking Mag 7. So that's okay. It's hung on, right? But it's very AI FOMO-ish. And both of these are red. So if this keeps up, and then finally, I've always said this, YBIT is a loser. I mean, big time loser. Yeah, a 20% spread. And this is going to get worse if crypto doesn't recover. So it's not like this has been great and this has never been great. All right, so you know the percent there, 75% Roundhill winners, only 15 out of 20 comparable funds, and then 4 that aren't comparable. All right, guys, if you want to know the Patreon, www.patreon.com/TWC. I think TWC 100 works. Somebody said it didn't. For me, it worked. Um, all right, guys, that's what I got. Not belaboring the point. Let you out of here. Have a great one. Bye for now.